Good evening. The next Planet MicroCap presentation is NowVertical. We have Sandeep Mandirata.
Thanks, Crystal. Welcome to the last session. Thanks for making it to the last session of the day. I wasn't expecting this much of a crowd, but thanks for making it, and great to be here. I'm anyways told that there is a reason why dessert is the last part of the meal, and this is the one here. Just about me, Sandeep Mandirata. I've been in the data and analytics space now for the last 25 years. Have got a lot of scars, delivering a lot of transformation programs with technology for many large enterprises across the globe, worked with different global teams. And one of the things is, it's just the love I have for what technology can do along with data for the large enterprises. And I happen to be the chief exec of NowVertical also. I'm joined by Andre Garber, who is the Chief Development Officer and the co-founder of NowVertical. We'll give you a bit of a background on NowVertical and how we have come to this point here. I've also got together some research, and that research is pointed towards what is our positioning in the market. So we'll give you some inputs on that as well. And then we'll talk about what the numbers are, and in the end, what are the growth opportunities that NowVertical has got and what we are looking forward to. Of course, the disclaimers, important part of the presentation. So what we do as NowVertical is we transform data for our clients into business value, and we do it with data and AI technologies. That's what we do for our clients. That's what we wake up for. To break it down, what does the transformation of data means? Well, many of these industries, most of the industries have gone through a lot of evolution. And while going through that evolution, they have created and generated a lot of data. Generating a lot of data, which is available now for all the businesses, is one thing. But how do you get the real value from that data? How do you unlock the value that's lying there? And that's one of the bedrock of the things that we have within NowVertical. So this is one thing which is the underlying thing of our business, which is never going to change, which is we transform data. Now, what kind of data do we transform is very important. Data is a massive subject. It's a big, vast area. We focus on customer and finance data. And when you put these customer data sets and the finance data together, it becomes really powerful, very valuable for the companies to utilize the insights with. Now, what does the business value means? How do we translate that into business value? One of the things we have imbibed within NowVertical is that we are laser focused on delivering tangible business value for our clients. What that means, as an example, is The Economist, who run a lot of content, in different parts of the world, and forecasting models also, both B2B and B2C models. We increased their subscriber retention by 9%. That's what we mean. The increase of subscriber retention by 9% is what we mean by business value. That's what we strive to do, and we are, as we said, laser focused on delivering that business value for our clients. And what we do is we leverage specific technologies on data and AI to do that. This is all the technologies like the Google Cloud Platform, Amazon Web Services, Microsoft Azure, Snowflake, Anaplan. There are some of the names you may not have heard of, but they're very specifically related to Anaplan, for example, is within the financial space. These are the technologies that we leverage, but what we do is bring in the technologies to the clients that are right for them, rather than saying, Here is my box of technology, take it or leave it. So this is what we do to deliver the right business value for our clients. So you can see there is a bit of a secret sauce that is already developing in what we do for our clients when you look at the customer data focus, when you look at delivering that business value and having that laser focus on delivering that business value and utilizing and leveraging specific technologies for our clients. We are 500 plus team members globally. We are spread out between two markets. That's how we are structured now. North America and EMEA market and Latin America market. So these are the two markets that we are operating in, and there are various countries that we operate in. Who do we deliver this value for? These are primarily large enterprises. We have got 250 clients, but 100 plus of those clients are large enterprises. These are household brand names, Fortune 500 companies with complex data landscape. You will see names like Disney, Haleon, you have got Reed Exhibitions or The Economist that I talked about, Sky, GlaxoSmithKline. In the technology sector, we have got Adobe and Palo Alto. NetApp is one of our clients as well. So these are some of the large brands or the clients that we deliver this value to. The research that I talked about, something that I would like to share with you, and it's got some really fascinating insights, I believe, for us. There is no argument that the cloud market is really growing fast, and it's grown to this $722 billion market. 63% of this market is really owned by the Amazon Web Services, Google, and Microsoft Azure. These are the technologies that really have that market share. And then rest of them is, Alibaba, and there are regional technologies that you may be having on the cloud platform. What's interesting is for every dollar of this cloud compute is spent, the partners like NowVertical, who are bringing the solutions and services to the clients and delivering that value, we make 6 to 8 times of that cloud computing dollar. And that's one fascinating insight, because if you look at what is the cloud market right now, 6 to 8 times of that is the solutions and services market. That's how big it is. And it's just going to grow further. I'll talk about that. What is happening as of 2025 is only 74% of these enterprises are really deriving meaningful ROI from the spend. And this is primarily in the AI space I'm talking about. The cloud infrastructure has been around for a very long time, but just if you look at the AI technology, which is quite new and evolving really rapidly, only 74% of 74% of the companies are yet to see any meaningful return on investment. So a lot of investment is going there, a lot of spend is there, but the return is not yet there. And there's that pressure on the C-level, on the business leaders to deliver the return on investment from whatever they are spending on the cloud compute. So that's one of the key situations we have in the market right now. As we go beyond 2025, this pressure that you have to deliver the ROI is only going to grow. And the reason being, the cloud compute market is growing quite significantly. But at the same time, the expectations from the return on that investment is growing as well, right? So if you look at it, 52% of the CEOs expects to see the return on investment in next 3 to 5 years. The investors are even more impatient. They want to see the return on investment in next 12 months. So that expectation from the spend and how do you really bring the value with artificial intelligence is growing quite significantly, right? Now, the point is, the data is there, the technology is there, and we know what the expectations are, because we know this is what the clients and the enterprise clients are really expecting from this technology. So the question is, why this is not happening? What's blocking it at this point in time? And this is what it boils down to. These are the key 3 areas that we have identified which are blocking all of the return from the investment on this cloud compute, especially in the artificial intelligence place. Organization complexity, I talked about these large enterprises. Now, these large enterprises are complex landscape of data, their own organization structure, their strategy. Strategy is not only complex, the strategy is evolving all the time in these large enterprises. And you cannot go and just deploy a generic technology or a generic data platform or just a generic AI model into these large enterprises. You have to be very specific to cater to their demands and objectives they have. So that's the organizational complexity that these large enterprises are dealing with. The AI complexity is also quite fascinating. Sometimes, and I've had so many questions even today, there's ChatGPT. Why are you valuable for these clients? Why can't your clients just do everything with ChatGPT? Well, the thing is, it's not just about picking up an LLM model or a ChatGPT model or an AI model. It's about having the right kind of library of these AI technology or these models, first of all. But then you have to think about what's the governance around these models. You then have to think about what's the security around these models. And you need to make sure that these models are really tailored for these enterprises so that they can achieve the right value, the business value for these enterprises. So that complexity of AI, which is new technology, how do you embrace that and how do you make it work for the enterprises that is changing and it's got a complex landscape is a problem. The data complexity is another challenge. The data is not only evolving, the pace at which it's evolving and how it has evolved in a particular enterprise, it's a unique situation always, right? So how do you deal with the data volumes and the complexity of the data landscape and unlock the value from it? That's one of the other complexities that you deal with. And one of the quotes that's there from Thomas Kurian, who's the CEO of Google Cloud Platform, his statement is that our goal is to get to 100% attached with every client, with a partner. And this is because he knows the value partners like NowVertical brings to these clients. Google brings the technology, but the clients are expecting the business value. And this is where we take the clients from this technology, this journey of getting to the business value. That's where NowVertical operates. And this is where we are aiming to get to that 6 to 8 times of the cloud compute revenue in solutions and services for ourselves. So that's one of the things I just wanted to share, this interesting insights and how this market is developing and how it's going to go in the future. The fantastic news is NowVertical is already delivering this business value. So I talked about 9% growth of the subscriber retention for The Economist. You can also see we increased the show turnout by 28% for Read Exhibition. Read Exhibition is a global business that has got many conferences, trade shows, exhibitions across the globe. So these are some of the examples. Palo Alto Network, very specific offering in the B2B space. We increased their partner attribution by 50%. Now, these are significant changes in these large enterprises, and that's the value that we are delivering, the ROI that we are delivering for the AI implementations. One of the things that has been validated, the value we bring to our clients is Google has given us the Partner of the Year award, which is not only the acknowledgement of the value we deliver, but also the validation for us in a very large space. This space is quite fractured. The overall partner landscape, the companies like NowVertical, it's so vast. It's quite fractured and fragmented. And getting this kind of a validation is really a boost to our confidence that we are delivering the right value to our clients. Now, how do we do this? I'm just peeling another layer of the onion here. How do we do this for our clients? It's all about enabling the AI and then applying the AI. So on the left side of the screen, if you see enabling the AI, it's all about how do you get your data together? What's the data strategy? What's the evolution of the data? What is the governance around data? What is the engineering around data? What is the security around data? So that you are preparing the data and it can be consumed by the AI technology. And that's going to be the bedrock of it. If you can't structure and make the data consumable, rest of the stuff is not going to work for you. And then on the other side is about applying the AI, which is about delivering the business value, whether it's about the customer retention, whether it's about the cross-selling or upselling of the products and services the enterprises have, whether it's the acquisition-related KPIs or the customer lifetime value. Any of those things can be delivered by applying this AI. And this space is going to get more and more sophisticated as we go, as we grow with these technologies. One of the things I want to share with you is this is going to be the question in everybody's mind. What's our revenue composition? 80% of our revenue comes from solutions and services we deliver for our clients. And 20% of the revenue comes from the software we have, the first-party software assets we have that we license to our clients, as well as reselling of the industry-standard third-party software. So that's how our revenue composition is. The interesting part there is a lot of this revenue is either recurring or reoccurring or repeatable in nature. So the software sales and the reselling is anyways a recurring revenue that we have. The managed services is also quite recurring in nature, just by the nature of it. It's managed services. But what we also have, interestingly, is the transformation projects, these large transformation programs in these enterprises that could be running for 3, 5, or 7 years. They are driven by technology, but they are delivering business value in multiple aspects and dimensions of the business. So transformations are one of the key areas that we are embedded with the clients on, and where we transform all of their data landscape, and not only the data landscape, but functions like marketing, sales, customer services, digital functions, all of those finance functions, all of those transformations come in that bucket. But where it stems from is our ability to go and consult, look at the landscape of our enterprise clients and consult them on what they should be doing about their target operating model, how they should be leveraging their data landscape, what kind of architecture needs to be overhauled, if you like, what technologies they should be fitting in to deliver the objectives they have. And that's where it stems from. And all we have to do is one proof point. The initial proof point is very critical when we are engaged with them. Most of the clients, we get engaged on the advisory and the consulting stuff because we go and discover their landscape, first of all, and we give them a prescription that this is how they should be running their roadmap and the target operating model. What this translates into, once we have the first proof point, is some insights here. Top 30 of our clients give us 60% of their revenue. But in the top 30, our tenure of relationship is more than 6 years. Some of the clients we have been working for more than 10, 12, 15 years as well. And what I was saying was, it just requires that first proof point where we have proven the technology, where we have proven the business value to them, and we have done it at a pace where they really enjoyed those benefits, and now they are looking to transform their whole business. That's the first proof point that is required, and then it translates into 6 years, 8 years, 10 years of relationship, where we take them through the cycles of the transformation with technology. Another interesting fact, there is $724,000 is our average per client revenue from this top 30 clients we have. And we have grown it to $724,000 in last year, which was 19% growth over the previous year. So what we have also proven here is it's not just about the relationship or the tenure of 6+ years average that we have, but it's also about the value it delivers to NowVertical. And there is no reason why we cannot take this to $1 million, $1.5 million, or a $2 million average. And it's already evidenced by the 8 clients we have that are giving us more than $1 million revenue per year. And we got this to that level from, we had only 3 clients in 2023 that were delivering $1 million revenue. So last year, we added 5 more clients. And this has happened just because of the focus and the discipline we brought about in working with these enterprise clients as strategic accounts for us. Crystal, you said there's no time warning here. No problem. Just a little bit of a background on how we got here. The phase 1 of NowVertical was all about the acquisitions. We grew by acquisitions. We did 12 acquisitions there. I came to NowVertical from one of the acquisitions. I sold my business to NowVertical in January 2023 with the ambition to grow the business further. I was not ready to retire or go to the beach. The second phase was where we consolidated the business completely, and it was driven by integration. It was driven by profitability. It was driven by sustainability. And we wanted to bring all of those businesses, 12 businesses together to make it one business. And this is where we started from, the collection of all the business units. And what we have created in the last year is a business, one NowVertical, and that integration is complete. 80% of that integration is already done. 20% I'm not even worried about. It will happen for sure. So it's an integrated business. We have changed performance metrics. We have changed balance sheet, cash flow. Everything has transformed completely. But the most interesting fact there is the management equity now is at 27% in the business. I have got 12% in that 27%, or total of 12% equity in the business. Andre has got 5%, and the rest of the management team has got pretty decent equity in the business. So this is the management team that's completely bought in to the growth of the business. And what we are now focusing on is the phase 3, which is all driven by the organic growth, is what we want to deliver. These numbers you will find on our earnings call as well. This is from Q4 and what we delivered in 2024. But the interesting part, the reason I wanted to show you the background is some of the growth numbers here are just phenomenal in terms of the percentage. But that happened because we completely transformed the business. Now, I don't want to set the expectation that every year we are going to have 400% growth on the EBITDA. But these are some best-in-class numbers in our industry. 24% EBITDA is what we delivered. Our industry is operating roughly around 15% as a best-in-class EBITDA margin in the services industry. So that's where we are already. 52% gross margin is, again, something that we are very proud of. Another interesting fact is we are net income positive. It's a profitable business. And this is one other thing that we have transformed completely. So it's not only one quarter. Last 3 quarters have been very positive, and we have baked that sustainability and consistency into our results in the business. Just very quickly, what the information technology services EBITDA margins, like I was saying, it revolves around 15%. This is 14%. What we have got is 24%. And the Microsoft partners gross margin is about 31%, and NowVertical is operating at 52%. That gives us such a nice buffer here to go and reinvest this surplus margins that we have now delivered into the sustainable growth of the business. Okay? Growth levers. These are the growth drivers we have to conquer and maximize the opportunity in front of us. The enterprise accounts that I said, we call them as strategic accounts. We are now moving from top 30 accounts to top 50 accounts for our strategic accounts. And that's where we are going to bring the focus on. Top 30 accounts are delivering 60% of our revenue. We will see what top 50 accounts are going to deliver with that focus and discipline. Critical technology partnerships, I mentioned, 6 to 8 times of the revenue. That's where we would want to operate our every engagement, where we are getting 6 to 8 times of the revenue on every dollar of the cloud compute. And I talked about, some of the credentials we have with the Google as the technology partner. We are working on developing further relationships with Microsoft and other technologies mentioned here. High value contracts. Scalability is already sorted in the business. Tomorrow, we win 2 million kind of a contract. We will not have any problems in getting the team on the ground in 2 weeks' time. That's how we have sorted our scalability between Argentina and India. And it's a very elastic delivery model we have sorted. And these are the growth markets that we are already operating in. One thing that we are keeping our eyes on is stabilize the business. It's gone through a lot of transformation. Stabilize it, bring that sustainability in, walk or crawl before you can walk before you can run. And after some time, we are also going to bring back the inorganic growth strategy. The business is going to be very nicely primed, which we have in our DNA. The acquisition is in our DNA. We have now got the integration playbook. We have delivered the organic growth, and now we are going to bring in the business, the acquisitions with very different psychology, which is going to be, can this business add value immediately to us, and can we integrate that business in the next 2 quarters? So that's going to be our growth trajectory, which I believe, and this is what I say, we have created unlimited growth potential in this business, and we'll keep going through the cycles of this growth. Just some numbers. Our stock price, where it is, 56 cents in CAD now. Our total debt is now at 18.2 million, which is down from 30+ million a year ago. So this is one of the balance sheet cleanup we have done, and you can now calculate the leverage ratio. We are in the sweet spot of that leverage ratio of about 2 times of our adjusted EBITDA. This is it. Thank you very much for your time, and I really appreciate you spending the time in the last session here. Any questions? Sven, you have already asked me all the questions last night. Yeah, we have got a packed day tomorrow with no breaks whatsoever. But Andre and I am going to be there here in the evening for the cocktail reception. So if you have any questions or you want to have a conversation with us, please feel free to come and say hi. Okay, thank you very much.